Hey guys, this is RC Peck with my At a Glance video, and I want to pose a question to you. And I want you to hear through the whole thing because this is not a question to hype things up, but are you prepared for a 1987 type event? And the 1987 type event was actually in October of 1987, and it was a one-day. The total fall was 33%, but the market fell 23% in one day. And I will often hear people ask me, well, how are you going to prepare for a 1987 event? First of all, I don't want you preparing for a 1987 event. The thing about 1987, I've looked at all the major market corrections. Any correction in the stock market that has been 20% or more, I've studied it. That's what I've been doing the last 2 decades, among other things. And what I've noticed is that one stands out the most, which makes sense because it is an absolute outlier. You don't want to optimize for every single correction over 20% over the last 120 years. Because if you do, you're gonna have this super complicated approach that is just gonna be unwieldy and confusing and horrible, and it's not gonna grow and protect your money well. I don't actually think 1987 matters all that much. It was a different era. The US economy represented about half of the world GDP. The dollar really was king then. There was no Chinese yuan. We had the German mark, but it wasn't as strong as the euro. It was a very different time. The PE ratio of the stock market was 6, 5 years before that. It's not like that today. Now look, there are some scary things that are happening today. I'm not diminishing those. There's a lot of uncertainty. There have been these negative yielding bonds. Lots of uncertainty going on with central banks, but still today, central banks are printing, not the US, but central banks collectively are printing $180 billion a month. $180 billion a month. That is flowing into the fixed income market and the stock market. So even though the US Fed or the US central banks are getting out of it 10 billion a month, there's another 180 billion a month that's being printed. So I'll do the math, that's 170 billion different. But back to the 1987 question, I don't actually think it matters because there was no way to prepare for that. And as you see on Saturday, I'm gonna show you the deep charts on the stock market, the fixed income market, the currency market using the US dollar, and the commodities market. Not everything can be prepared for. What you do want to prepare for are the high probable corrections, like 2000 was a high probable correction. There were the tells, the normal tells of the market, like 1974, okay, 1998, 2000, 2008. Those are more of the healthy type corrections. I don't mean 58% fall being healthy, but what I'm saying is they were predictable. There were moves between fixed income and commodity and real estate and stock. And that's what you want to do. You want to look for the high probability events that seem to keep repeating themselves over and over because humans, generally speaking, don't actually ever learn. And so I don't think 1987 actually matters that much. And when I think you see the price charts where I dig into it on this weekend, you'll have the same. What I want most for you is to get on the side of probability. Go with what's actually happening today, not what you think should happen or what must happen, but what's actually happening today. And what's actually happening today is there are a lot of scary things that are happening and the market knows about it, but it doesn't care. And I don't mean to seem too flippant, but it's not gonna matter until it does. And there were scary things in 97, in 98, in 99, and they didn't matter until 2000. Now, I don't know where we are with that kind of that metaphor of the late 90s, but the market knows more than we do, and until it matters, it doesn't matter. Hey guys, thanks so much. If you find this of value, please like, share, and forward it. And if you have not subscribed, go ahead to the website and subscribe because it makes a difference. Okay guys, thanks so much, and I will speak to you soon. All right, bye.